so we've been obviously since like 2008, maybe in the upcycle, or 2009, maybe in an upcycle, right? And we're coming down, like, I guess it's, 12 years later. So this cycle has actually really taken a long time. Sometimes the cycles are around 8 o'clock, 8 years, not 8 o'clock, 8 years. And then sometimes they're like, 12. So we're in like year 12 going into 13 or so. We could say whatever you want, whatever years, but 10 years, 12 years now. This has been like a really, really long cycle. And so people, so the question is, what's going to happen? What's going to happen in the next couple of years? And everybody knows that, right? The interest rates are going up on the residential side, right? Everybody knows they went up by 50 basis points, I think, like the other day, right? So, and interest is going up. And actually the truth is, like, I don't know if you guys are in Facebook groups or not, but you guys tell me what y'all are seeing out in the world. I'm in one Facebook group right now where it's a Texas Facebook group for real estate investors. And they're saying, like, there was a post about a person that just got a loan on the property, an investment property, and he's paying like 6.67% interest. 6.67% interest, and he put 20% down. All right, that's a high interest rate. Now, obviously, it's not high in comparison to what the historical data shows, right? Because back in the day, people was like way up high, but it's high compared to what typically normal people know. So in my mind, I'm just thinking, like, in terms of storage owners and storage facility owners, what is going to happen to the market, right? What's going to happen to the market over the course of the next couple of years in the storage industry, right? Now, this is the question. That's the question of the day, right? And, and I just got off a coaching call with a student, and I would have gone into this with him and gave him my 2 cents, but our coaching call was coming to an end, and I had to jump off the call, and I don't see him on here. He's not hopping on, but essentially he's looking at a storage facility right now in New York, in the Finger Lake area. Okay, is where it's at. Okay, and so it's a 90 unit facility, and it was about like 12,000 square feet or something like this. It was right around, I think, like 12 or 13,000. I can't remember the square footage, but it was 90 units. It was making around 100, a little bit over 100 grand a year. Okay. And the owner wants $800,000. Okay. So if you run the numbers on this, and for all my students that are joining, and you guys are all going to come to the boot camp, so you'll be able to see me run numbers. I'm not going to run numbers now because I just want to talk about this, but essentially, if you run the numbers on an 800 unit facility that's making 100 grand, and it's 100 units, I mean, typically that facility, it came out to the value of like, $900,000 at a 6 cap, And that was one thing that I talked to my student about. And that's really kind of that's a question of the day when you run deal analysis, is what's the typical market cap rate going to be, right? And so we were running those numbers at a 6 cap because it's New York, and New York tends to be more expensive. And, and so we were looking at it this way.